And good morning, everybody, and welcome to the TriggerCharts pre-market rundown for Friday, August 14th, 2020. I'm Andrew Horowitz. I'm the co-founder of TriggerCharts, and I hope you're enjoying the markets because they're giving you a lot to trade with. It's been pretty volatile. It's been pretty exciting. There's some incredibly wide ranges that are going on. And of course, it's important to understand that what we do with TriggerCharts is provide you those ranges and those support and resistance points that are important for you to look at. Before we go on, I just want to do a quick disclaimer, make sure everybody understands a couple of different things, that this is for educational purposes only. It's not a recommendation to buy or sell any security. It is not at all any kind of inference that we are suggesting any security that we talk about. Anything that we do talk about is really for you to take a look at, further research on your own, because investing carries an incredible degree of risk. Now, I want to mention a couple of different things to you. First of all, this is what we're going to talk about today is some of the different indicators that we have here, and they're all available on the TradeStation trading app store. We are number one, numero uno, and most popular and highest rated. Depending on the day, it kind of moves around a little bit, but we are the highest rated with 5 stars overall. And that is because, and I can tell you this because I'm getting emails about this with a lot of people thanking us that they're making money, because this creates a very easy surface for you to understand where it is that there are the breakouts, the breakdowns, with color coding that makes it very easy to understand, keeping you on the right side of the trade. So I want you to consider that, number one. Number two, I think it's really important also to understand that if you're having any trouble, we're here for you. We have a good support system. There's an amazing amount of videos over on TriggerCharts.com, also on our YouTube channel. Make sure to check that out. You know, do the old like it so that we can get some more people looking at it and making sure we understand what you like. But over on the TriggerCharts, we do a copy of or a replay of these, as well as other training that's available. And finally, this is really important. Anyone that signs up for the Commander Series as a paid subscriber will get a 4-hour online coaching program, which you do at your leisure. Do whenever you want. And we've gotten a lot of really good feedback about that. It's a $199 value. So you can go right over to the trading app store. You can sign up, send us an email at support@triggercharts.com, and you'll simply get the keys and the codes to get your 3-part, 4-hour coaching session that is kind of a very timeless positioning program where we want to make sure you understand all the ins and outs of what's going on. Now, let's launch a poll, because I want to kind of get a little feel for where you are and what you're trading. So the poll is, what do you trade most often? So if you can do that in the background as I'm going through a few things here on what we're talking about today, as we do each and every week, discussing what's going on with the markets, what's happening with economics, what's really moving markets, so that you could be honed into what's trading now and into next week. You'll notice on the top here, we have the futures down 115 on the Dow. The mini S&Ps are down about 5. And of course, as you know, every day the NASDAQ seems to go up. It seems that way, at least. But they're up about 15. They're dropping from where they were. But we're seeing still an incredible amount of buy the dip. There's this overwhelming desire for individuals to buy any kind of sell-off that happens. And I think a lot of that is due to the economic healing that we're seeing. We're seeing better numbers in the employment numbers, which are very important. We saw retail sales this morning coming in a little bit short of expectations. However, if you kind of subtract a few things, it looks a little better, like looking at the core versus the headline. The productivity numbers were really hot, pretty good. CPI inflation on a month-over-month basis that we saw recently is very, very hot, but on a year-over-year basis, it's pretty relaxed. I mean, for the most part, everyone out there believes that the Fed will be involved and very much keeping interest rates at a very low level, thereby justifying valuations. Nothing to do with charts, nothing to do with markets in terms of technical analysis, but the fundamentals are out there. And when you look at that, and when you have a very excited retail investor who's investing, $12 into 10 shares of a very small price stock, or somebody who is using their time for trading as a game, rather than what we do here, we have a very refined and technically driven process, right? That's what you're learning all about. It's not about just hearing, oh, that name was talked about, that guy on this channel, and said, okay, I'm buying it. No, What we're doing is we're utilizing some key levels and important data points to find out where we actually are going to place our money, where we're going to get out, where we're going to stop. It's not like we're going to buy it if it goes down. Oh my gosh, we're just going to wait until sometime, someday that it comes back. No, we're actively trading here. That's what this is all about. We're giving you those tools. And you can see on the right-hand side of the screen here right now, you can see this is the S&P, the SPY. And you can see very clearly the color coding that we're talking about. Right now, we're in I would say, closing in on all-time high levels. Obviously, that is starting to get a little bit of some level of support here at about the 336.90 level. Got above that a couple days ago, turned from orange, which was an out, got you out real quickly, but it held beautifully on support at 332. That's what we're looking at here. There's a wide range. There's all these altimeters inside of the Commander series are very, I would say, very wide. And when you look at wide altimeters, what's happening is that, you have to look at the fact that volatility is going to be there. And when you have volatility involved, that means that you have to be prepared to possibly do something like reduce your overall level of exposure. Maybe not trade 5 contracts if you're trading futures, but maybe trade 2. Maybe if you're used to trading $10,000 a trade on an SPY or a stock or whatever it is, maybe take it back to 5,000 until you can get your confidence. So I think that's really important. I'm going to put a link into, here we go. Let me just copy that and put it into the chat. There you go. All right, let's take a look at our poll. Everybody finished? I think there's like about 85% of people finished. There's maybe 2 people. All right, let's end the polling right now. Here we go. Here's your answer. What do you trade most often? Forex, donut, 0. Stocks, 31%. ETFs, 23%. Futures, 31%. That's the winner. That's the number one on the people that are on with us today. And options, 15%. One of the great things about options is obviously it provides you a lot of leverage. You have to be right a few different times, right? You have to be right on the volatility range. You have to be right on the time frame. You have to be right on technically the velocity of the move. You have to be right also on the strike price. So you got to be right on a couple different things there, the way options markets are, especially with the VIX being a little bit elevated over 20. That means option pricing will be a little bit higher. However, what you do with options, and all of you people that are trading options right now, I want you to listen to this. Options can be a great tool. You do not use the options in our system to come up with the trade. What you do is use the underlying security. You say, oh, I'm going to trade, let's just keep it on the SPY for here, the SPY. So what do I want to do with the SPY? Well, you don't put the SPY, let's say, January 15th, 2021, strike price 330, which would be currently in the money on the chart. No, that's not what you do, because not enough trading and volume that goes on there. You want to look at the SPY. You want to utilize that. And then you go, okay, well, at that point, I feel that I'd like to be long that position, or let me give you a better example here. If I wanted to go short and use a put option on this, I would look at this chart to the right on a daily basis right now, and I would say, you know what? There's a lot of support, looks like, at 313. That goes all the way from June all the way through August, right there. See that level right there? So I would say that maybe what I would want to do is buy the put, okay, at I'm just going to round number here. Let's say 310, okay? And that is a bit lower right now, and I'll do it into January, and that is where I think the downside is going to go to approximately, or you can go a little bit above to say, keep yourself in the money, maybe at 315, let's say, and utilize this chart for guiding you on what you want to do with the options. That is the very best way to utilize the overall charting process, because then you have your defined levels of support and resistance, not the individual options, but rather utilizing the underlying. All right, so let's talk about this. So buyers out in force, retail driving market. We see about 20% of retail trade in the market, and a lot of that is very small trades. That is a lot of trades that are in and out, a lot of churn going on lately, which is fine. Valuations and the economy are pretty much disconnected. That continues. We don't see any change to that for some time. One of the big things that we saw recently was the whole idea of splits. Everybody's getting really excited. We saw Apple split. Apple's coming in with a 4-for-1 split sometime in mid-August, I believe, and all of a sudden the stock rocketed. They did that right on their earnings announcement. So the combination of the split, which we haven't seen splits. Splits used to be active many years ago. Splits really haven't happened lately. One of the reasons is that in a lot of places you could trade partial shares. So you could buy, one or a dollar amount. I could buy, instead of buying a whole share at Apple at $430, I can buy $50 worth of Apple in a partial share. And because Apple holds such a big position in the Qs, QQQ, I could possibly even buy that and say I got exposure to Apple. Well, I can't buy one share if I don't want to spend $436 for some reason. Apple's theory is, you know what we're going to do is we're going to split the shares. And it's going to make it more usable, more user-friendly for smaller investors. And understand something. There is no difference in a stock, fundamentally or anything otherwise, after the split. If you have one share at $430, let's just call it 400 for calculation purposes, $400. After the split, you can have 4 shares at $100. Now, for whatever reason, there's a craze going on that this is very exciting, that maybe more stocks will split, that the splits mean something. Tesla then comes along. Of course, we know they're really big in doing a lot of work to burn the shorts and to do some financial engineering. Well, Tesla comes along after they're starting to droop down a little bit and decides to do a split. They're going to do a split, and the stock goes up like crazy. We'll look at that stock also in a moment on another screen. But splits are kind of big, and a lot of people are thinking, what other stocks are going to split? Booking Holdings, which is very high priced. Amazon is very high priced. Dare say Berkshire Hathaway. I mean, if it's working, it's working. So with that, what's happening right now is there's a bit of a craze going on and excitement that it's going to be a lot more of a shareholder-friendly environment, and that's going on. I told you about inflation kicking up a little bit. We saw some big inflation on a month-over-month basis, but on a year-over-year basis, still staying relatively tame. But one of the big things, the measures of inflation, things like gold and silver and bonds in certain degree tips, are really doing very well. Yeah, we had that major sell-off a couple of days ago, particularly with silver down 15% on the day, the worst sell-off it's had in years. There is a speculative fever going on in the metals right now. There's no question about that. And what we're seeing is that a lot of people are hopping on the train a little bit late. We talked the last few weeks about the opportunity to be in gold and silver. I think that right now the energy shares also, number one overall contributor to inflation has been the price of energy. Also, one of the best performers last quarter was energy. So things are pretty much in the inflation camp. And I think that things are starting to, people are starting to worry that with all the stimulus that we have already and the low interest rates that we have already, and who knows how much longer it's going to be there, and the bond buying that we have already, that this could amount to some significant amount of inflation, particularly if we get a vaccine. Because really, have you noticed that the news of any of the virus has become like, okay, we know we have it, but it's not really impacting markets anymore. Even with increased death rates and death counts in many states, Florida down here having its highest daily death rate just this week, and positivity rates in a variety of places going up while testing is coming down. Something a little strange going on with the testing right now from the total overall testing. There's some question as to where the mix-up is happening or what is happening. But we're not really hearing about that anymore. Really what's moving the markets right now is all about the stimulus talks that is seemingly broken down, where Senate has left the building. They're gone for vacation. Can you imagine? Can you imagine a tech company or any other major company having a deal on the table, like there's going to be a merger or something, and then saying, you know what? We really can't come to an agreement here. We're going on vacation for a week. Can you imagine that? The companies would be obliterated. The management team would be eviscerated, and there would be a whole different discussion. But meanwhile, we keep on voting these idiots in that will dare take a vacation. A vacation. It's not like they've been busy, but they've been doing a lot of stuff from home and all that. They're taking a vacation right in the middle of this time when we're trying to understand what's happening with the ongoing payment for people that are unemployed. This whole payroll tax thing that was recently implemented and all that. It's kind of, don't get me started, as they say. But we did get executive orders on some of this for evictions and for student loan interest. We have something for the payroll tax deferral, as well as an executive order for $400 a week. The overall spending is going to probably have to come down. $600 a week is no longer, and already there's not anything that's really been implemented. So there's a gap of at least 2 to 3 weeks right now already with people getting money. So that's a problem. We're going to talk about Tesla, Apple's Space, WW, Purple, NTN. I want to show you something interesting on NTN and a few of these. All right, you guys ready to go? I don't want to go there. That's not what I want to go. I want to go to, do I have it here? Maybe I don't have it here. Here it is. I want to look at the KRI for 1 second, just to get a sense of where we are. This is a great tool because we've been seeing a significant heat up. If you notice here, there is an area on the bottom here that's showing us that we're starting to heat up. It's not as bad as what we saw back in June, where we saw that big ramp higher, massive cluster on the top, and then that big drop. Remember, that was at the 1,800-point day on the Dow, and pretty ugly situation for the NASDAQ as well. But we are seeing a consistent heat up, much greater than we saw in the range in the beginning of July. And we're starting to see some cluster formations. Importantly, right here, I'm drawing a lot of circles. We have a 5 that we hit a couple of times. Right now, currently sitting at about a +2 after things calmed down over the last couple of days, but yet we are starting to see that there is some froth in the markets. Now, one of the things that you want to look at as well in this whole situation is the fact that we have what we call a mildly overheated market. So what this says is not necessarily that things are going to automatically snap back. Usually when we see a 4, 5, or 6, 7, definitely, like we saw, this was a 7 here. It popped 7 intraday there, or there it is, 7 right there. And we knew that there was going to be a problem coming up very soon. Well, right now it really talks about that the potential for the trend to continue and it to move in the same direction as when moving, and we know that is up, okay, potentially could continue for some time to come. All right, let's get to here. And this is what the Commander series out of the box looks like. Well, not with some of the stocks on here, but you get this top area. This top area is really the heart. It is really the important part of what you're looking at on a daily basis, because what we're seeing here is a multi-time frame. What this does is, look at this for a second. This is really kind of interesting. What this does is, see this 30-minute chart here, or this 60-minute, you know, M30, M60, M20? This is the equivalent of a 30-minute chart that you have going on down here. So if SPY, okay, we can see that it's gray on the end. See that on the end, it's gray. That means it's out. There's no trade. There's no trade. If we change this, though, if you see the 60-minute, I'm going to show you something. We change this to a 60-minute. Did I go 60-minute? Oh, no, there's nothing there. There's 240. Yeah, let's go to daily for a second. Well, here's a daily. So the daily is showing us daily 2, which is 2. We have the alert and then 1. So we always add the alert as 1. You have 2. So you could see what's happening at a glance, where the bias is, all the way from weekly on the right. We're looking on the right here and looking at weekly. And then we go to daily. We always look from right to left, right to left, right to left, right? Say it in your mind. Look left, look left, look left, like you do when you're crossing the street. What do you do when you cross the street? Probably came right to your head. You look both ways. What do you do when looking at charts with trigger charts? You look left, because we want to see the historical reference of where we are. And more importantly, we want to see where areas of resistance or support were from before, and where can we connect those together. So for example, a great example right here, and let me bring this up and show you. And I'm gonna draw a line over the other line. So check this out. I'm gonna connect these. Just look at that. I'm gonna connect going back. That's the same number we said, where there's multiple levels that we can connect. It creates a larger and a better support area. And when you have those areas of support, you can have a higher confidence that if the stock does start to trend down and get lower and lower and lower, that maybe this is going to be the level that you're going to look at. And that's where you could possibly take the next position. In addition to that, when we look left, what do we get? When we look left, what we find is, and when we look at this, you want to see, okay, where are there areas that not much is happening? Well, if you get below this blue line right here, which is our point of control, or a high volume node, if you will, this is an important level. That's the strongest level in the entire overall internal support inside of an altimeter. When you get below that, where's the next level of support? Well, it's right here at the green, right, which is our support. We call it the lift and the stall, but basically you can look at this as resistance, support, point of control. Now, when I take this level here and I look at it and I start saying, well, between 332 and 326, look left, there's blank. There's nothing here. Look at this. There's nothing here. What that means is that that's a pretty fast zone, that it should move through time and price very quickly. Those are the kind of opportunities that we're looking for, where we can see the move through time and a vertical move through price. Now, we don't want to really see, you could see something like this here, this horizontal consolidation. See that on the right side here? No, let's click that back. It's a bit of a consolidation, not that long. It's only 1 day since it's a short-term chart here. But those consolidations are something I want to show. Let me jump right to a stock that I picked for you today, hand-picked, I think. Maybe I didn't put it in here. This is what we call a long consolidation. See that flat? You could take your drawing tool, always use your drawing tools. You got the lines, you got the vertical, you got the horizontal line, you got the box, you got the arrows, you got circles. Let's take a box. Let's draw this box and take a look at this incredible consolidation right there. That consolidation goes all the way back from the beginning of June to August. It comes to the top, it bounces on the bottom. I mean, look at this. It's almost like clockwork, right? Goes to the bottom, it holds, it comes to the top, it sells, hangs around the middle a lot, comes to the bottom, holds, starts moving back up. Look at all these. You could trade this inside. How many times could you have traded this? Until it then falls below, and then what do you have? Well, let's take a look. Let's just use a line tool now from TradeStation. Where's my next level? Well, kind of right about here is where the support level is, right there for a first line of support. So what I could say is, you know what? I'll hold this down to about 22. Below that, I'm going to start getting possibly a little bit worried. If you go above, and let's get rid of all of these little check marks we have here. If we go above this level, what do we have? Well, there's really, when I look left, I'm going to look from right to left here. What do I see? Not much resistance till I get to about 30.70. So right now the stock is trading at about 25.30. That's a nice gain. It's almost a 20% gain from where we are right now, right? $5. So when I look at this, I'm looking at the fact that, yeah, look, it came right to the top there. Let's draw this line, because you could learn a lot from drawing lines. I know that sounds kind of hokey, but let's just draw the line when we think that resistance would have been right at there. And look at that. No mystery. Came right to that level and bounced off, and then came back right now and doing this. But what you have here, this is a really important lesson, and I can't stress this enough. What you have here is a spring that's compressing, compressing, compressing. What happens when you let go of that spring that's compressing? Pop, right? That's what's happening here. Either it's going to pop to the upside, or that spring is just going to lose all of its springiness and just droop down. So this is the kind of long-term compression where you have an inability to get above or below a certain level. These are the kind of things where you see that is trading in a range for a very long period of time, especially when you use your box tool. When it breaks above, if you just want to trade the outside, the breakouts, which is fine, well, you look for this to break out above about 27.5. If you look or break down below about, we'll call it 23.5. So if you want to trade it that way, but if you want to trade the insides, look at this great trading opportunity you have here, and then you just wait for what it breaks in whatever direction, and then take it and move with it from there. But let's go through a few things. Oh, I want to mention Bitcoin. You could kind of track Bitcoin. You could track Ethereum. You actually trade some of these on TradeStation too. Is Ethereum breaking out 424? This is live and ticking throughout the weekend as well. But you could trade this. Look how great this trade is. You saw a lot of consolidation going on. This is exactly the same thing. Look at this. Look, this is on a daily basis. And let's not even look at the aileron, which is a great tool to show us that, hey, there's a big move to the up. It kind of consolidated, but look where we are now. We're in a kind of a good zone where we're seeing good momentum. All right, but put that aside. Look at this. We got a breakout above the 210. Took us up from about 210 to 245. Then it got a little short, it got a little long. It didn't do much. But if we take our box tool and we draw a box right there between the tops and the bottoms of that long term, we're talking about from June to August consolidation. Again, exactly what we talked about with WW a second ago. Exactly. What happens here is, what you look at is, well, there's a great opportunity. We got that spring that's loading, and then pop. Look at this. Went from 240 on the trade, and it's still long. It hasn't even gotten you out. Somebody asked the question in the chat that says, hey, do you get out on the orange or the break above or below that bar. You get out on orange. That is the, and then you could potentially get right back in if the color changes. So for example, if you look to the left here, we had it in at 396. You moved out right there at about 426. It's consolidating, consolidating, consolidating. So right now there's no trade. Now, if it breaks above or below here, you would get back in. But orange is kind of a safety valve to take profits or to hold on and not lose any further money. So for example, right here, you would have gotten short if you do that. Example, doesn't matter the positioning. You would have gotten short here at about right about 388. And then it kind of moved down on you, 377. If you didn't get out by then, which is fine, you'd attract. I mean, I would have looked here and said 379 is a little bit of a support. Maybe I should get out. So the aileron start dipping down a little bit, but nothing terrible. Got you out right here. Pretty much break even. Same thing on this trade. Came down below, got you out of break even. So you were testing, kind of testing the water a little bit before you jumped in. Think of it like getting into a pool, right? A really cold pool. You're not sure what you want to do here. You dip a toe in. Didn't work. Oh, wow. Too cold. I want to get in. Dipped a toe in. Okay. Didn't work. No harm, no foul. Didn't get the bathing suit wet yet, right? You still got just a couple of toes in the water, maybe up to your ankles. No big deal. You don't have to worry about drying off. No problem. And there's no harmful after effects from this, right? Now, you're kind of standing by the edge of the pool waiting for the right time to dive in. That's what you got right here. That's the big dive. You're saying, you know what? I'm taking it because it moved up above and you got in somewhere on this bar. Usually it's on the bar that connects afterwards, but as you're moving up into this bar, there is a long entry that's confirmed right here. It's usually at the end of this bar, the 60 minutes, you would have gotten 410 if you really were very conservative. However, if you see this long-term situation, one of the things we coach our users to do is to look at where and how much it's moved up above. If it's just snaking above, just like right in this, just a little bitty bit, maybe not. But if you're kind of like really starting to move up on a lot of momentum, and we're starting to see the momentum shift on the aileron. Aileron is a different package, by the way. Aileron is an add-on to the Commander Series. So you're not going to have this Commander Series come with the aileron, just to let you know. You're going to have the radar, which is the top. You're going to have the two charts. You're going to have the, comes with the autopilot, comes with the altimeter, comes with the radar, and it comes with the multi-time frame autopilot on the top here. So, but this is a great example of the spring action. We got a few minutes to talk about a few things here. Apple post-split, just went parabolic. Oh, it's down a little bit today. Unbelievable. But, got the split news and just keeps on moving. Tesla also up 2.5%, up another $40 today. Tesla came in right here. Here's where they announced the split at right when it was starting to, maybe somebody's looking at our charts, realizing this thing is going to start coming down. There's a short called right here. You got a few points into it, and then they got this announcement of their split, and the stock went, pretty much from that day, 1320 up to 1620, 200 points on the split announcement. We've been watching this one for a while. SPCE, this is SPAC. It's kind of in a long-term consolidation right below the levels. They did a secondary offering, starting to see the aileron move up a little bit right there. Purple, mattress company. They had a pretty weird night last night. They came down really hard. It's only down 5.5. I would watch this one. I think that you maybe have the chance to kind of short this back into about 2030 from this top range here. Below that, there's some support at right about 1981. So, there is the potential for this to trade within. It's holding really well right now, not a very actively traded. I want to bring this up because how bizarre this chart is. We only have one more minute here. Yep, one more minute. And I want to thank you, by the way, for joining us. Tell your friends. Make sure to please tell your friends. Send them that link that you get. Send them the email that comes out and say, hey, sign up for this. But I just want to show you what kind of junk stocks that have been sitting basically at $1 range for some time. These are not things you want to trade unless you're really fast, really quick, and you want to get in and out of something very quickly. We could have done that at 293, went up to 7, came all the way back down, right now trading at 3 again, right about here. We saw this, for example, with a couple of other stocks over the last few weeks. Remember Kodak? I said, be careful of this one. Kodak trading at $9 right now. Still above probably where it should be. But these are the kind of moves where you see this long-term consolidation and they pick up these small guys and just, it gets a little crazy. Gold is kind of hanging in there right now, reached right back up to its the resistance level. Resistance becomes support, support becomes resistance. Aileron is starting to droop lower. DDS came out. I would think there's going to probably be a fade throughout the next few days. They came out with earnings last night, but a lot of that was from, I would say, financial engineering on when they brought back some of their losses from previous years that they couldn't use and certain tax credits. So something to watch there that this could, yeah, see it's starting to come in a little bit already. What do we have? We have, and last was Fastly, stock that moved up well beyond its levels. I mean, a stock that was up from 30 to 110 in a matter of 3 months and broke down on not so great earnings news overall. All right, I want to thank everybody for joining me, and we'll make sure to get this up on the YouTube channel as well as over on TriggerCharts.com. Thank you. Have a great day. Get some profits. I know you can do it. Any questions you have, support at TriggerCharts.com. I'll see you again next week.